Good day. Ira Epstein of Linn Associates with your agriculture update, and this is for the end of trading on Monday, and we are June 3rd, 2019. The time just now about 3:35 p.m. Central Daylight Time. A really mixed day. You were in the wheat market, sharply higher. I call 16 cents sharply higher. In the corn market, down 2 3/4 because traders thought that the crop conditions report today was going to come out much better than it actually did. So we're looking for this market to at least move back up and try to take out these highs over the next day if those traders had placed bets on the short side. We'll see. 10-day weather forecast still has rain in it, so you got to keep your eye on that. Bean market up a little bit. You can see how cotton got a good jump. And on the energy markets, down across the board, and the cool weather is keeping a lot of pressure on natural gas. So let's go, if we could, first, right where I wanted to, which is the crop report. Corn planted progress, 67% compared to last week's 58 and a year ago, 96. The market was talking, we had heard on the floor, about 71% complete. So we think that's a little bit friendly for the open. I don't know if it'll carry beyond them, but that's what we're thinking. The soybean planted progress is at 39% compared with last week's 29 and a year ago, 86. Now remember, as you keep going with these low numbers in soybeans, you're losing growing days. And as you lose those growing days down the road, it will impact yield, is the thought process. Cotton 71% compared with last week's 57. I don't see where this market has got a problem right there. You're pretty close to the average. Spring wheat came in emerged at 69% compared to last week's 47. I missed one of the numbers there that would have helped a little bit, which would have been the planting. Sorry about that. When we come to the soybean weekly area chart, we were talking and had been talking last week that if the market rallied, would it be able to get up to the weekly moving average of closes? It did. The market finished today at 879. That number is 876 and a quarter. So what it does here is going to be a very, very important number. There are two gaps in the July beans: breakaway, runaway. If you get a third one, it's called an exhaustion gap. I'm not saying you will or won't get it, but those are the common terms. Now, gaps in charts often get filled unless there's a dramatic change in something. The dramatic change right now has been the weather, but as fast as weather gets bad on June 3rd, it can improve. So it's just something to keep in the back of your mind. As a technician, I'd look for this gap to be the most likely filled, and then the question is, can the market get back to that one? When we look at swing lines, this is a chart just with the gaps, but when I put the swing line on it, you've got higher lows and lower highs developing right now. That's a market that's in a pause. Take out 690 and 3/4 and you keep this pattern of higher lows, higher highs intact. The 100-day moving average would be the next key number that I see on the chart at 901.5. Should you break through this 863.5, you put into play the possibility of getting back to 838 and a quarter. And if we take a look, that's very close to where this gap in the chart is as well. When we look at Bollinger Bands, what is now containing the market, that's the right word to use, I think, is that number. The market got over it, fought back to get back under, had 3 days in a row or so over, now back under it. If you clear that again, I'd look for the 100-day, but then I'm looking also at a lot of resistance in the market. In terms of momentum, you have a market that's overbought. In order to change from overbought to locking in a trend, and I'll show you that lock in the next grains that we look at, both numbers have to stay over 80 for at least 3 days in a row. You have nothing like that in soybeans. You're just overbought. In the meal market, you're getting thrown back now by the Bollinger Band. What you pass through, I wish I could say this might offer some support on the way down, but let's assume it breaks there. I don't even know if it will. But because the market paid no attention to it on the way up, I don't know if it'll pay attention to it on the way down, and that puts into play the potential for the 18-day average of closes on a hard break. Let's see if you get the hard break. In terms of trying to embed, both numbers over 80, both over 80, both over 80. So you've got your embedded reading. So until that's lost, one would say, at least I would teach, that the market on pullbacks is still looking for buyers, and they should be there. If this red line gets under 80, pull back, because weather markets have a way of giving you a correction that you may not be ready for. In soybean oil, this market's trying to flirt with actually throwing out a sell signal. It didn't, but it's flirting with it. Lower highs, lower lows. Unlike the soybeans and the meal, notice how sideways you're going. Momentum has already turned down. The market held the bias up because it closed over the 18-day average, but if it gets back under it, it puts into play the possibility, if the grains start breaking, of getting back to the 26.49 level. Right now, the battleground's the 18-day average of closes with resistance at 27.92. Here's another embedded reading. I think you can see how it's working here. Now, yes, it's trying to turn down, but it hasn't turned down. You still have these numbers in the good mid-80s at this point, so it's strong. You have the pattern of higher lows, higher highs. The upper black Bollinger Band, you can see me pointing to it, is acting as the resistance point right now. It'll be interesting tomorrow to see if we get up there, what happens. Some of the traders here think that the market's going to open higher because of what we said about where the planning number came in, but fail and make a short-term top. I don't have the slightest idea. I'll be looking for a short-term top if and when the lower Bollinger Band closes under 80. Until then, I'm not. Unlike soybeans, notice how wheat paid attention to the 100-day average, acted as resistance, came back, fought against it on this one break, came right back to that zone, and zipped again. That's the difference between looking at the soybean chart and this chart. Sometimes the moving average works, sometimes it doesn't, but gives you an idea. When you look back, you can get an idea. You have an embedded reading. You have a market that's hit upside targets. At any point, it can pull back, but until it loses the embedded reading, it's still bullish to me. Sugar market went up to the upper Bollinger Band Friday, went up there again today, closed slightly over it by 8 points. It's not acting like a market that wants to run just yet, but the trend is up, the bias is up, the resistance is the upper Bollinger Band, and you're overbought. In the coffee market, again, you just keep moving to that upside. And yes, you were down today. And if you look at the settlement at 103.75, it did get back under the lower Bollinger Band. So we know that that's a resistance area. You had a lot of days over it, then came back to fight on Friday. See how this one did? And that Friday close was pretty darn strong, closed well over that number. So you were over the number on Friday. You were certainly over it on right here on Tuesday. What was this day? Thursday, over the Bollinger Band, over it there, not there. So we have 1, 2, 3, 4. It's rare that you go beyond 5. You could have been there, but it's rare that you do. And it pulled back under it. That's all I'm saying. So the market, embedded reading, still bullish, support the 100-day average, working again there. In the cocoa, I was surprised this market let go today. It lost the embedded reading, turned itself down, could be headed to the 100-day average, but this has suddenly become an ugly-looking chart. In the cotton market, you have a pattern of lower highs, lower lows. You settled over the 18-day average of closes, which negates both of those, and you're overbought. Will this market be able to get up to the upper Bollinger Band or start slipping away back to the 100-day average, I think is the question. In the cattle market, high feed prices continue to weigh on what this market's doing. I mean, if you own live cattle, you want to get them to market as fast as you can because your feed costs just went soaring on you. If you own feeder cattle, well, at least it's spring and summer, so you can do a little better, but you got to finish them at some point. Lower highs, lower lows. I think this market's doing its battle darn best right now to try to get back towards that Bollinger Band. You're under it today. On Friday, you finished at 103.07 under the Bollinger Band here too. So you have 3 days in a row basically under it. We'll see if you pop back over it tomorrow. Feeder cattle, downtrend, oversold, fighting at the Bollinger Band, but still a downtrend in the market. And in the hog market, still no news, anything good. I mean, we keep cutting off our crops. We lost soybeans with China, and now with this tariff war, you do know that Mexico is one of your biggest buyers of corn. If they turn elsewhere, we're single-handedly really destroying our trading partners. It gets to be a little bit ugly. But that's weighing on all this right now because would you rather feed an animal or sell the corn if it's a high price? That's the problem. So that's what's weighing on some of these animals. We discuss this and a lot more in our Linn research because we cover all these different categories. And we cover them in a unique way where we write for both end users, we write for the speculator, we write for the commercial that's in the market, the farmer that's looking with hedge ideas, what does he do? And we cover other markets as well. All day long, by the way, through our charting software, we're talking. And I use the word talking. We have people coming up telling you what's going on in the markets, what they see, everybody from David Hightower Report, and so on. So if you haven't tried our products, not only should you give our research a trial, but you might want to give a try to our QT Market Center. It's pretty interesting. I think you'll find as a trader you like what it is. If you miss one of the reports, there's a media section. Just go right to it. It'll play for you. Away you go. That's not to say anything about our written reports throughout the day. You're going to really see a lot. And unlike so many firms, we're writing on Sunday night. We're actually, when the markets are open, you're getting info. Give us a call. You can go to our website. You'll see a carousel of free offers. Click away on it. Take what you want there. Do the same if you want to click up here. It'll take you to our carousel if you're watching us on YouTube. I'm Ira Epstein. You have a great trading day, and I'll see you all